that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at charts, economic data, corporate information, news, upgrade, downgrades, looking at good candidates for plays as well. Kind of have some fun while we're doing it along the way, and welcome out everybody. If you're brand new to the channel, make sure you click subscribe and click that bell. Come back and join us on a daily basis. We do the show every day the markets are live. We go live 12:30 p.m. Eastern Standard Time. On today's show, we've got the Queen, Coach Emily, joining us for another Tuesday round of the Queen's Court Market Analysis. How are you doing today, Emily?
I am doing wonderful. It's beautiful and sunny over here in Washington, D.C., so I cannot complain.
We have a little sun coming out now, but we actually got snow last night after a beautiful weekend. It's the way spring works in Salt Lake County. So
until June, you'll get it again.
We'll get it every now and then. That's how the mountains work. That's how the mountains work. Matt, how you doing today, sir?
Doing absolutely fantastic. Excited to be here with the crew.
And Mark is here as well, as always on Tuesday. Marky, how you doing?
Listen, I won the family NCAA bracket tournament, so I'm doing extremely well. I'm also like 45 days out from those May options, and that's a sweet spot. So I'm trying to navigate my portfolio. I like it when you get in that 45-day range. Mm-hmm. That's when I try to maximize option selling.
Yeah, that's the sweet spot, anywhere between 28 and 45, right? As you're capturing that time decay curve, there's a lot of, education around that. Guys, if you want to learn more about that type of thing, go take the Options 101 course at Tackle Trading. But that May option, 45-day out, Mark, I can see why you would be busy as a theta trader today, trying to find some candidates for that. Matt, before we get too far into the show, though, I do want to promote our podcast that we just released yesterday on the Trading Justice website and through all of our podcasting apps. We had a conversation about infrastructure. We put the podcast out once every week for the better part of about 8 years now. It's pretty incredible to think about. 7 years, I think. And yesterday's episode 419, was on the infrastructure proposal put forth by President Biden, but also the need for infrastructure in this country. I enjoyed the conversation quite a bit. Matt, just talk a little bit about this podcast and what people would get from it, as they go and listen to it.
Yeah, we had a pretty interesting and fantastic conversation on the need for infrastructure, why right now. But obviously the Biden administration put out their infrastructure plan last week, and as we discussed last week in the halftime report, we wanted a couple days to kind of digest and review the plan, and to see if it was truly an infrastructure bill, because we've been teased a couple times, we've been fooled a couple times on potential infrastructure bills. But we had a chance to review the infrastructure bill over the weekend, and obviously talked about it on the Trading Justice podcast yesterday. I think what's going to be fascinating, and I hope everybody enjoys the conversation, but I fully expect the infrastructure deal to get passed. I believe Wall Street expects the infrastructure deal to get passed. It's simply a matter of how and what goes in the plan at this point, and how you define what is truly infrastructure and what is a secondary impact on infrastructure. And so I look forward to seeing that conversation develop over the next couple months. But quite frankly, I fully expect infrastructure to pass. It's just a matter of what the final price tag is.
Yeah. And we broke down some of the details of what is the traditional infrastructure, secondary infrastructure, and some of those numbers and whatnot, but we kept it quite a bit on the high level, as well as the need for it. I would recommend everybody go and listen to the podcast on a weekly basis. And if you're not yet a subscriber, make sure that you do that. It's a rare day where we actually have two podcasts to promote before we get started. The Huddle as well, each and every day. If you're a veteran of the community, you know that we've been talking about this for about 2 months now. We started with the writing portion of it. Now we've added the podcast portion of it as we've gotten the product out there and getting it out there for you guys to better run your daily routine and make it more efficient. Right on tackletrading.com at the top, click the Huddle. It will open a new tab. It will give you the top 5 stories of the day. You can read through them. You can also play the audio directly from the website, or you can subscribe on iTunes or your favorite podcast app and listen to it on the go. It's about 10 minutes at the most, usually 7-8 minutes, and just gives you the stories that we think are most important, most relevant. So I'll grab the link to the Huddle. Guys, if you've not done it yet, make sure you subscribe to that Huddle. And Matt, it's a fun product. It's something we're doing regularly, and hopefully people are getting value out of, right?
I agree. You do a fantastic job on the Huddle every day. And again, stay on top of the market 5 to 7 minutes every day.
Let's do it.
Simple.
Yeah, it is. And I like simple. Simple is a good thing. And by the way, today, Emily, the markets are pretty simple. We're dojing across the board here, hesitating after hitting all-time highs in the Dow, the S&P. I don't mind days like this. And Marky, for a cash flow trader, a little doji days are also good days as well. Matt, can you give us a thorough technical read, just quick one across a couple indexes? What are you seeing in the broad indexes here?
Yeah, we're talking a little bit about just a little hesitation candle, I would say this is a little narrow range, small body candle, nothing really to see here. You could call this random Tuesday or a random any other day when the markets get a little overextended. And I do believe at this point now with yesterday's price action in the markets are slightly overextended technically. And what I mean by that, when you're looking at from pivot point to pivot point, let's look at the last few historical pivot points to kind of give an indication of how far markets, how far stocks, how far commodities, how far currencies, how far anything you're analyzing, how far it can run before we start to see a little bit of hesitation and before we as traders start to anticipate a little bit of hesitation. And the hesitation for new traders, not a bad thing. Really, really, really positive thing. It allows moving averages to catch up. It allows high bases to form. It allows very good, clean triggers. So hesitation is actually very, very positive. But let's take a look at it from a technical perspective. Currently, from pivot to pivot, and again, this is a subjective conversation depending on where you assess your pivot. And again, it goes to the age-old question of wick versus body. Wick versus body. Now, for me on this one, I'm going to use body. I'm not using wick on this. Reason very simple is I got one data point. I got a cluster of moving averages. I got everything here. I got a lot of data here. So I'm going to go from 3880 up to 40. We'll just round it up 4080. So 3880 to 4080. Tim, how many points is that?
3880 to 4080 is 200 points.
200 points, right?
Yep.
So the market, we know the market is currently running about 200 points. Well, is that a sprint and I'm tired, or is that a marathon and I'm tired? Well, let's go look at the next data point, pivot to pivot here. Okay. Now on this one here, I'm going to use the wicks. Now, Tim, why am I going to use these wicks?
Because that's actually
I didn't use the wick.
Well, because that's where the demand came in on those two different candlesticks. That's where they put in the bottom over two different days.
Over 2 different days, but that ain't a random Sunday wick either.
No.
That's back to back, right? So there's a lot of price action there. So I'm going to use those 2 wicks. I'm going to go from 37.30 up to the top shelf at about 39.70. Once again, that'd be 39.70. So let's go to the wicks down here at 37.30 to 39.70. We move about 240 points.
Yeah.
Now in this one, we moved about 240 points until we got a little tired. Got tired from a little bit of consolidation, a little hesitation before we start running again. Let's go look at the next one. Now this one here, I'm going to just go to about right here in this range. And I'm going to go 36.90. Again, it's not exact science. It just gives you kind of ranges. Let's go right there at 36.90. Let's go top shelf here on resistance at 39.40. How many points is that, T?
So
250 points.
36.90, 39.40, another 250. So
a little
pretty good pay
250. So we got about 240 and 245 pay ranges. So when you're looking about a 245 pay range historically, and I think this is a very similar. It's a good little activity to do in any market condition, but I do like it when you get into the top end of the range because it gives you a little bit of an identification of how far a market, a stock, an area of the market can move before it starts to get a little bit of range up and before traders start to get into the zone of locking in profit, right? Because we know gains are only made when you actually click the button, right? It's not those hypothetical gains in GameStop. That's not how it works. You got to click the button, sell it to bring the money back into you. So to do that, this is a targeting technique that we like just to put us into the zone of when traders start locking in profit. So when a market goes from currently 30, 38.70, 38.80
Mhm.
up to 40.80, and it's moving about 200 points, you start getting into that top end of the range where historically the market starts to simmer down and starts to slow down. And when you look at the volatility and you see this, all of this right here is the same type of volatility. There's no change in volatility here. So this price movement and this price movement and this price movement are all connected to the same storyline. And so you have very similar volatility. And so it wouldn't be surprising to me that coming into a random Tuesday, Wednesday, and Thursday where there's not a lot of news that are driving the market, for the market to hesitate a little bit, because you're at the top end of the range. There's not a lot of catalyst out there to continue to move you past what historically has driven the marketplace. And so, no, it wouldn't surprise me to see a little bit of this over the next 2 days, or a little bit of this over the next 2 days. And again, that's simply because you're at the top end of the range technically. And a lot of times when we see that, we simply start to, you start to get into the cooker analysis, right? Put it into the crock pot, put it into the cooker, let it simmer a little bit, simply because you're a little bit of range up. So technically, I would say we're a little bit of range up, not overextended, but a little range up, not a lot of information to drive the market. Hesitation Tuesday. Very simple today.
And Mark, I can already guess the way you're approaching it. You hinted at it earlier, looking at the 45-day options to sell. So when we are in conditions like this that are very bullish in general, but we're range up on the short term from a pay range analysis, that I love that map, by the way, great analysis there. Marky, how do you approach it? You know, are you just focused on theta? Are you locking in profit? How are you approaching it?
Whenever you break out, you know, even a cash flow trader like me, like I do primarily cash flow, but I'm always looking for directional opportunities as well. And so as soon as we broke out on the broad market, that gave me the green light to, if I like some directional opportunities, to take them. And so, you know, I'm not afraid to take directional opportunities, but I am going to be cognizant of on things that I maybe can take some profit on, or hit through a cash flow. Also going to do that. So it's a nice blend, right? You still have the open ability to take directional opportunities, but you also, you know, if certain things hit profit levels in the next day or the next week, you can look to take profit. I mean, it's just a nice environment to have. On the Sunday night show this week, we talked about like some of the past breakouts. Like if you go back to January and February on the S&P, you know, some of those breakouts on the S&P weren't like stellar, oh my gosh, blowout breakouts. But those were great directional trading environments. The S&P doesn't have to go gangbusters for there to be great directional opportunities. So, I mean, I think you have a really open playbook right now as a trader.
Emily, any one thing you want to add to just broad market analysis here before we flash through the rest of the indexes?
No, not really. Same sentiments as Mark. I did go on a little bit of a hiatus last week, so I kind of missed on this run here. But you know, I still have some cash flow trades. I wish I had some directional trades, especially after the breakout we had on here on Friday and yesterday. I mean on Thursday and yesterday. But yeah, just cash flowing right now. Now definitely looking to get into some delta trades. Kind of wait to see what the market does here in this little doji candle today.
Yeah.
And if Emily would have called me and asked me my advice on when to take her vacation, I would have said, you never take a vacation on the day the market's going to break out. You always take a vacation when the market's overextended, because it takes about a week for the market to set up again.
I know.
We got to do it more efficient.
It was spring break. Blame it on spring break. You know, these kids, they want to go out and do stuff.
I'm gonna blame it on kids. I've been doing that on everything. I just blame the kids. We're good.
I've been blaming my kids for a long time.
Yeah, we're good.
Yeah.
I just blame the dog, blame the kids, blame anybody.
Nothing wrong with that. Yeah. I don't see any discernible difference in many of the major indexes from
I don't think so.
Price perspective here today, Matt. So why don't we flash through commodities next?
Well, just quickly, let me just take a quick peek at the indexes. You got the S&P and you got the Dow Jones really kind of on the same type of technical read here. I wouldn't say, and again, I don't want to make people think that this market is completely overextended and needs to take a complete break. That no, we're range up. is the point. We're range up, and then when you range up, it's not shocking to see a little profit taking come in until you get another short-term catalyst that ignites the market from going higher here. And so when you're looking at the Dow Jones, again, wouldn't say you're completely overextended, but I would say you're a little bit range up. Very similar read on the Dow Jones as I do the S&P. NASDAQ, when you're looking at the NASDAQ, as we discussed yesterday, the NASDAQ's in recovery mode, and when you're in recovery mode, you're simply going to have to fight against a little bit more resistance levels that as you fight back up to achieve those all-time highs. So we're going to see that a little bit, but still very positive here. This price movement, and again, talking about shifts in volatility. Look at this, then look at that. That momentum there that's legitimate momentum in the NASDAQ. That is legitimate price movement in the NASDAQ. And the only thing that gives me a little bit of hesitation in the NASDAQ is this volume is not exactly showing me massive participation, massive excitement, like everybody and their dog and the mailman and everybody else saying, hey, you got to go buy stock. Hey, you got to go buy stock. Hey, you got to go buy stock. Like literally nobody's saying that right now. And so we got great price action in the market. We don't have great participation right now in the marketplace. And I do think that is a little bit concerning, specifically in this run. So a little bit of cold water analysis there, but again, nothing to get too concerned about as the NASDAQ does try to fight to get back more correlated there. And then the Russell 2000 we talked about. Overall, we are seeing a little bit of shift in mentality towards the Russell 2000. The trend right now is obviously neutral. And so until we break out one way or the other, you're going to have a neutral read on the Russell 2000, which means you're going to have separation from a stock pickers analysis in those 2000 stocks that we like to call the small and the mid cap index. So again, it could be some really not could be. Let me remove the word could. There are some great trades in the Russell 2000, but you're going to have to work a little bit harder in the Russell 2000 than you are the S&P or the Dow Jones right now.
Yeah, there's no question. It was such an easy run there for several months as it was just riding the lightning across that 90 MA and the 20 period moving average. Now those pivot relationships moving into a sideways consolidation. You even mentioned cash flow condors yesterday, potentially again. And Emily, you know that system for years and years and years and years. I mean,
Yep. I finally put on an actual iron condor. I was just placing the bull put spreads for quite some time because I wouldn't dare put on a bear call spread. But yeah, I actually put on an actual bird this past.
You wrapped the bear call finally after like a year. I'm just lobbing bull puts, lobbing bull puts.
Nope, not gonna do it. Not gonna do it. I refuse.
I'm gonna break this wing. I'm not doing a condor. I'm just doing a bull put. I'll say I'm trading the condor system, but I have zero confidence in doing the bear call side of that system. No, I get it.
Yep, absolutely.
And I also understand why people are looking at this, the Russell 2000 right now and saying, yeah, I do have a little bit more confidence to throw a bear call spread. Now that confidence is probably a 3 delta versus a 13 delta on the bull put side, but at least the confidence is building a little bit, right, Em?
It's a condor.
It's a condor. Exactly. Like 20% of our community understood exactly what Emily and I were talking about right there, by the way.
And I'm going to 20%.
And if you don't, you need to look into
the cash flow condors.
Yep.
It's a wonderful system, especially for neutral condition and cash flow. And by the way, that bull put technique, that's a veteran trader of that system who knows how to take that one leg off. Now that you're wrapping, it does tell us a lot about the way you've been approaching the markets there, Emily. So that is good information. By the way, my sweet Molly, my 70-pound little puppy, she's not that little, just came in and she's wet as a dog it can be out in the snow.
She might be 70 pounds, but that dog acts like a 170-pound lap dog.
I've never met a dog. Well, actually, I have met one dog like this. This is Tanyan's dog as well. They remind me a lot of each other.
That dog is a miniature doodle, and your dog is a behemoth.
It's a behemoth, no question about it. Blame it on the dog, Emily.
Blame it on the dog.
All right, let's flash your commodities here real quick. Crude oil next. Mark, let's bring you in. I saw that obviously there's some chatter about oil production cuts from last week. That's old news, quite frankly. The crude oil chart's stuck here in a range. I know that that the U.S. and Iran are sitting down in Vienna for initial conversations about potential nuclear conversation there, but that's way early in that process. I don't think
Wait,
it's
what?
actually
I didn't
moving
read that
the
news.
oil
What?
markets. They're going to talk about potentially lifting the
Wait a second.
sanctions
They're going to
against
talk
Iran.
about hypothetically when they're going to talk about the talking
Yes.
of. Okay.
They're
Okay.
starting the
We're good. We're good.
conversation.
We're good.
There's nothing
They're
there yet.
starting to think about starting the conversation.
Kind
I
of.
love how that works these days.
Yeah. Marky, what you read on the oil markets right now?
I mean, listen, there's not a lot to add to what we've been adding. As long as it stays in this short-term consolidation range, you know, you can have back and forth, back and forth. You know, I'm still bullish on energy stocks. You know, from a cash flow perspective, they're treating me really well. And, you know, and so like I am, you know, in trading you learn if it's not broke, don't fix it until it breaks, and then you do a trade management decision. And until then, you know, it's a good cash flow environment with oil, and I do still maintain I think that there is going to be a pop this year on that reopening once things get aligned.
Yeah, but in the short term, it's kind of stalled here, obviously. And it's actually, I thought energy had a chance to move a little bit higher this morning. It was up about 1%, but it stalled at that line that you've got right there, Matt. I like that line because until you actually get confirmation, you do not have confirmation. You broke that down yesterday. Anything you want to add to XLE here?
No, a little hesitation, but nothing has changed from the analysis yesterday. The 20-period moving average, which coincides with this left shoulder on the head and shoulders. Again, this could be, and I think we need to be a little hesitant in energy right now. I still agree with Mark that a leg is definitely here, and the potential of a leg is definitely here, but you still got to see it, right? Before that confidence starts really building. You think it, you think it, you think it, you see it, a different reaction, right? So I've seen this quite a bit in the market where you have some hesitation where if I saw this in 2018, I'd be calling for a reversal, quite frankly. But post-pandemic, the trade has actually been the broken wing here. And so when you're looking at the left shoulder, when you're looking at the right shoulder here, and you're looking at that 20-period moving average, a lot of times what I've seen, and again, this is just my reading of the technical condition, but a lot of times what I've seen is the better way to approach these types of scenarios technically is K-trade analysis, where you're saying, I still like energy. I like energy long term. I still believe that energy is going to catch up, but I'm not touching this until it breaks, or I'm not adding to this until it breaks. And then if it breaks, you see that leg. If it doesn't, you got a clear line in the sand at the 50-day moving average, a clear line in the sand at the 50-day moving average. And so I think the analysis is relatively easy, quite frankly. As the 50-day moving average creeps its slow moving train up to that price action, you just be patient. You let it play ball. You give it all the room it needs to breathe and and all the time it needs to decide to make that run. Because you want to be a part of energy if it breaks that level. Mark, would you agree with that?
Yes.
You want to be a part of energy. You don't want to be making that decision on energy at $54. You want to be a part of that decision as above 51.
Mm-hmm.
And so whether you have a standing order to take action there, or whether you are just being patient in handling the profitability of that type of movement, that's just up to the trader. But for me, it does feel like reversal K-trade analysis, where the probability historically would be a little bit of short-term bearish downtrend after a movement like this. But in the pandemic, I've seen these support levels just get stuck, and then it ultimately ends up breaking out and start a new trend. So I'm a little bit more concerned than Mark, but I'm not. It's not a concern to the point where it's like, oh no, you got to be like locking in profit here. I just think it's a little bit of hesitation. That's it.
Mm-hmm. Mm-hmm. And we got to let that play out. Like you said, you got to be patient. You got to wait for that breakout one way or the other on this hesitation. I agree with that 100%.
I just don't think people should overreact to consolidation in energy after energy went up like 40% in the short term.
Yeah. No, I mean, we went from $27 on this ETF to 54. That's a double at one point there from tip to tip. So
Well, and also when you're talking about energy and looking as it's kind of hesitating between those moving averages, the 50 and the 20, I don't think anybody's concerned on energy in any capacity if 58 holds in crude. Like if 58 holds in crude here, is there any concern about energy, Mark?
Nope.
No.
I mean,
So,
there's not.
like none. Like,
And let me take that a step further. If 58 holds in crude, not only should there not be any concern, there should be a lot of freaking excitement.
yeah, I agree with that. I agree.
Yeah, I agree. By the way, something to really get excited about, maybe even quicker in the short term, is gold here today. If you want to take a look at that chart, we've been watching this developing consolidation, moving from the bottom. It double bottom. Now we're pushing up towards resistance. We will want to look at the gold miners here in a minute as well, because it's actually leading against this like it has been for some time. Matt, this is kind of what we wanted to see. You know, Marty came down, found the trampoline. It bounced off the trampoline. Here we are up now pushing against resistance at 1750. What are you seeing in the chart there?
I'm seeing a W.
Mm-hmm.
I'm seeing what my son Tanyan
Hold
at
on.
5 years old would
Pause.
have been seeing there.
Emily, you like W's. Is that what I just
Who doesn't
heard
like
right there?
W's?
You,
Who doesn't like W's?
like the Baylor
was-
Bears?
Hold on,
It was
don't-
one of the easiest ones to recognize when you're brand new as a trader. That's all I looked for about 6
listen.
months. I couldn't find anything else.
Emily, the only thing I needed outside of the was you throwing popcorn in the air and saying, "Yep, let's do this." Yep.
No, I just hopped on my thing because I started looking at FCX and all the gold miners while you were doing that. So.
Oh yeah, Tim's talking gold. I'm like, I just want to go to GDX. But no, I mean you're seeing a short-term W formation, right? And obviously you got reversal. The spidey senses are up, right? They are. The spidey senses are up. You got a reversal in gold. We all love gold. It's just it's an instrument we all grew up with as young traders, and it's part of our philosophical viewpoint.
Mm-hmm.
You know, gold ownership and whatnot. So we all get excited a little bit when you see reversals, and I think we all get a little bit more excited when you see very consistent reversals. And I think you get a little bit more excited when you literally can draw the W and it looks like a W.
And I say this all the time. I always look for the easy stuff. Just give me the easy stuff. You don't have to overcomplicate trading, right? You just look for the easy stuff and just take it. That is a double bottom, forming a W formation, waiting for that breakout, and boom. Keep it simple and keep it moving.
Yeah, and keep it simple, keep it moving. And the thing that's front running this and what we've been talking about for the last week as this reversal is forming is actually what is transpiring on GDX. And seeing whereas gold comes down and, you know, tests 31, GDX forms a higher support level at 31.85. Whereas, you know, gold is now reversing, GDX is now confirming. That's the difference. When you find something that is tied to something else, but it's front running it, that's the instrument you look at in the short term. That's the instrument. And so if you are looking at gold as a potential reversal, and yes, we have been tested here. We have been tested here in the reversal. So that is there. We've been tested on confirmation above the 50-day moving average there and there. And so we've been there, we've been here, but again, I do think this is in a buying situation.
Yeah.
I think the combination of gold W formation coming into these major support levels, as you can see over here, coming into these major support levels, looking at this on a weekly chart, coming into those major support levels, major resistance, major support levels. As you see that slowing momentum here, as you see that W formation here, as you see that fight for that confirmation right there at 1750, as you see gold do that, you look at GDX and you see very similar, but you see something that's front running. And unlike here that tested above that 20 weekly, you're now seeing confirmation here. And so again, we're only on a Tuesday. Weekly charts don't confirm until Friday. So it could just come right back down. But here on a Tuesday, you have analysis in gold, in GDX, where you have confirmation on W formations. And when when you historically look back, this could be the beginning point of a trend. You never know yet. That's not how trading
you don't,
works.
but and
You
we
don't
talked
know.
about that. We talked about this yesterday. How gold came down in those two violent days and stuck support just on a dime, like a figure skater doing, a perfect 10 at the Olympics. Came down, stuck it in the midst of really heavy short-term pressure, immediate bounce. That was telling to me. I've been adding, I saw that put that you talked me into on GDX here yesterday. That's why I love tackle trading so much. Is that I was already doing my stuff, but there you came up, you gave analysis, you gave me a trade idea. I thought it was a good one, took it, added to my gold. I added a little bit more gold this morning. I like it. I like it. I do.
Well,
I think we could be at the beginning of a trend. And if not, then if it comes back down to the support, you can cash flow.
Well, and that's the beautiful thing about gold, and that's the beautiful thing about GDX with people who understand the options market. When you start to see reversal characteristics in a product like GDX, the reason you can start building confidence in, and the reason you can start adding to a position or initiating a position on daily charts like this instead of waiting for weekly charts to confirm is, quite frankly, simply this number here. You don't have to deal with the volatility of other tradable instruments. You deal with a very simple standard volatility skew. You don't have to deal with random craziness in volatility, which means if we do see a slow methodical market that gold is typically does, and the type of trader that is attracted to these slow methodical type of trends, they love selling covered calls in those environments. And so you don't have to deal with, and in covered calls, like I've done enough in my life to not want big volatility in covered calls. If you're getting a 6, 7, 8% ROI on a covered call, I honestly think you're treating an instrument differently than other people are treating that
That's
instrument.
a red flag, in my
And
opinion.
it is a red flag. It is a red flag because the volatility is simply too high. Whereas with a product like GDX, you don't have that aggressive volatility, which means you don't have as many trading decisions to make. You don't have as many trade management decisions to make. And even though every advanced trader I've ever met will geek out on trade management conversations, literally geek out on trade management. Oh, you can do this and you can do that and you can do this and you can do that. If you asked any trader at any point if they would rather make a management decision or not make a management decision, I promise you they would all rather not make a management decision. And in a product like GDX, when you're doing covered calls and you have a volatility of 30%, you don't have to make that many management decisions. And that's where mistakes live, quite frankly, is when we make decisions. We love set it and forget it. And set it and forget it in a covered call with a volatility of 30% is a hell of a lot easier than doing it with the volatility skew of 60%.
Yeah, I agree. I love the analysis. I love the commentary, and I think the product right now is really set up for some opportunities moving forward. And yeah, I've always taught students that, when I've been mentoring Emily over the years, and I worked with you years ago on this. When you see a 7-8% return on a cover call on a traditional instrument, that's a big red flag. That even on any stock, that you've got to at least dig in and figure out what in the world is going on and why is the market rewarding
You have to
me?
match. Yeah, you have to match the strategy to meet whatever goals you're trying to achieve. So if your goal is if a strategy says, to aim for a certain percentage, right? And you're getting a much, much higher ROI, you have to sit and ask yourself, what is ahead of this? What am I going to be facing if this thing goes haywire? Like you said, we all know all these management techniques, but I don't want to do it. Why should I if I don't have to? So go for the easy stuff.
Well, and quite frankly, let's say the analysis is dead wrong and GDX just completely reverses from this point forward, and you repeat the next 6 months like you performed in the last 6 months, and you're like, oh my goodness, the last 6 months, yeah, it went from 40 to 34 in the last 6 months. Well, in that 6 months, if you were just writing covered calls against it, you didn't lose any money. You might have lost price appreciation, but you didn't lose any money because you offset that through the covered call. That's the beauty of a product like GDX. When you can do that with volatility around 30%. I'm sorry.
And Mark said this earlier when he was talking about, being 45 days out and starting to look at cash flow. The best thing you want is $45 for that, 45 days later for that sucker to be worthless, right? You didn't have to go in there and manage anything. You just want to just get your premium, get your cash flow, and have to do absolutely nothing.
Yeah.
It's just a beautiful financial product for that.
I agree with that 100%. All right, let's quickly look at the dollar. Not much going on there. The pullback continues, but it's still in a short-term uptrend. And then Bitcoin, anything you want to add to dollar Bitcoin, you go right ahead, Maddie, as we're looking at him. Bitcoin just hesitating and stalling up here near the high.
Yeah, just hesitation.
Other cryptos are taking their turn here in the last couple of days. But let's move into stock talk if we can. By the way, while we are before I move past this one thing, the IMF did upgrade their global growth GDP forecast to 6%, up from 5.5% in a report overnight. We know the economy.
They must listen to the podcast.
Yep. They probably did, but we know the economy is going to heat up, and that's the second time they've upgraded in 3 months, by the way. So here we are. Let's talk stocks. A couple of them in the news I want to, have a conversation about. Then we're going to have an edition of the Queen's Court. You hear in just a few minutes. Hopefully, we can all keep our heads again for another week. We'll see if that.
Did we all keep it last week? We all kept it last week.
Yeah, but if Matt's speaker goes out, he is dying.
Because Mike dies.
Hold on. Hold on.
And I'm not jinxing you, but if it goes out, you are dead.
Okay. As you kill me, though, even when my speaker was terrible last week, my pick still went from 280 to 310. I'm just throwing it out there.
I know.
Just throwing it out there.
Yeah.
Sure.
The Queen expects success. You can't brag about success. The Queen already expects that you're going to bring her great analysis, and
that's what people that bring terrible picks say.
No, I had Microsoft and Walmart. They're doing fine. They're doing just fine. All right, let's talk about a couple companies here. Credit Suisse, CS, real quick. They got caught up in that whole Archegos capital management. It seems like Goldman Sachs, JP Morgan kind of avoided it. They did report overnight that they had to take a $4.4 billion write-down because of that, but market didn't actually move the company. It's kind of priced in right now. That whole fallout seems to be going up behind us. 2 weeks ago, Mark, this was, do we have a contagion event? Do we have a Lehman event? I saw the headlines. It ended up becoming a fizzle event that only impacted a couple of different companies.
What did we say? What did we say? When everybody else was saying that contagion event, what did we say?
That's crazy.
That this is silly. Come on, what are we doing? How do you even mention Lehman Brothers in this situation? Like, have some historical context, people.
It did lack context completely, no question about it. Paychex did report earnings, PAYX. Actually, the company kind of gapped down on the news. Matt, I did want to get a technical read here. This has been a strong performer for quite some time. It gapped into the 50-period moving average. Essentially, they just didn't do enough. It's had a really good run the last month. They came in line with expectations, didn't have a lot of positive commentary moving forward. We got to navigate COVID. We got to do this and that. They expect the jobs market to recover, which will help their payroll processing company, but it wasn't enough for the market to like it. It gapped down into this 50. Is there anything that you see here that grabs your attention at all?
No, I didn't follow Paycheck's report here. I'm getting into the preparation of earnings season. I'm in that mode, which means I'm not looking at Paychecks today. I will tell you that a company that is talking about concerns in navigating COVID with the vaccine distribution, the rate we're doing, gives me concern.
Yeah, it gave the market concern as well. That's why it gapped down 6%.
What are we doing? Why aren't you talking about positive stuff, Paychecks?
Tell us the positive stuff. They didn't do that here today, and the market punished them for it.
And it's early. It's early. But if we start seeing other companies start to warn about stuff, we might be sick of getting warned about things. You better start doing things.
That's right. No, I mean, this is we're heading into earnings in a few weeks, and I mentioned this on Sunday night as well. Listen, we've gotten some passes on earnings seasons. There's been a couple earnings seasons the last year where it didn't matter, nothing mattered, right? We're not in that market anymore.
Nope.
We're not in that market anymore.
No, we're not in the, hey, hypothetically in 6 months, if we navigate these headwinds from a COVID situation, we're going to be back to where we're going to be. No, you need to get back to where you were.
And it's a reminder that trading through earnings, if you've never traded through earnings except the last year, you really need to, and we'll do some specials for pro members that tackle trading, like on earnings, because earnings can be very tricky. Very tricky, and I think we're heading back into normal trading conditions.
Mm-hmm. Next story, I'm interested in mostly. I think it's a fun one, and I want to get Mark's take. People may not know this about my older brother. He used to run a card shop. Give me Mudrick Capital.
I saw this. I saw this.
MUDS. If you
we got SPAC news, and it's SPAC news in it. Here, I got to do this one. My first business I ever had was right out of high school. I had a baseball card shop, and if you know anything about baseball card shops, there's lots of brands, but one of the old brands that have been around forever has been Topps. Topps baseball cards been around for decades and decades.
Topps?
Muds is taking Topps public.
Are you serious?
Is taking Top, and Michael Eisner is the chairman of the board on Topps.
Mm-hmm.
The old Disney CEO.
Mm-hmm.
And so Topps is coming public via SPAC, approximately at 1.3.
Do they make NFTs?
They do.
No, but I'm sure that's around.
They sell the Topps NFTs. Those are really.
I was going to say, is that what they're doing?
I don't know if they're doing that or not, but I know they sell the Topps NFTs. I've seen some go for auction like crazy recently, so it got swept up with that. Marky?
I look forward to shorting this company at some point.
But no, old Muds. I think it's going to be traded on the NASDAQ, ticker symbol TOPP. So when it eventually de-SPACs.
I got to tell you, there's a lot of brands that have made comebacks in my life. I did not expect Topps to be one of them. And
I saw a Topps Tom Brady rookie baseball card sell for like $2.5 billion the other day.
Bro, there's so much money in the system.
I want my Dan Marino mint rookie card from 1984 back from the X from high school. I want it back.
Yeah, Marky, did you hold any of your old baseball cards? Did you?
I did. Listen, I've been a minimalist for a good portion of my adult life, so I did not hold on to any of them. A bad financial decision.
Oh, yeah, I can't imagine what your baseball card business would be.
Oh my gosh!
Today.
Like
because when we talk about Mark having a baseball card, like he wasn't running a tiny card. He had this massive card shop with like 3 employees, and I mean, when we talk about a business, he was running a business. It was actually very impressive looking back.
No, so it was nostalgic when I saw that headline, Tim, and I haven't gotten into the financials yet to see, but when I saw Michael Eisner was on the board, I was like, listen, we'll give her a look once get some financials. I mean, that's the thing we're learning about SPACs. Once again, the old this last year is going to be an aberration. We look back for years and years to come. There's no more just blindly betting on anything. You got to do a little due diligence and look in. Evaluate the financials, see if it's a good deal. So, I am going to start that process though.
Mm-hmm.
Topps. Wow.
It doesn't seem like the business model is going to be selling baseball cards.
No.
They obviously are going to look to capitalize on the NFT situation that's going on. And that seems to be kind of from the press.
Well, I honestly, I didn't know anything about this story, like literally nothing. That was my first instinct, was they're trying to capture NFT nonsense, and that's what led to I look forward to shorting this company.
It's an interesting story.
I maintain my initial comment.
Yeah, I'm with you. Norwegian Cruise Lines, NCLH, another reopening type theme. They actually were up a little bit here today. And Marky, I don't know what your interest is in the cruise lines. We'll get that take here in just a second. But they're looking to sell from their ports by starting July 4th. And there's some reports that they're going to get that approval to do it. Another economy reopening type storyline that we're seeing. Mark, any interest in the cruise lines right now?
Reopening plays are buy the dip plays for me. So when you get sell-offs, that's where I look at them, and then take profits on runs. That's how I've been playing in them for 9-12 months now. So because it's choppy, it can be choppy. I mean, the bursts are big. The sell-offs are big, which I try to, so I'm a buy the dipper on all the reopening. Once it gets ripping on good news, I mean, it's just, there's a cycle. I mean, this has been going on for 12 months. Good stretches, really bad stretches, back and forth. End result, up. So.
Another similar story, Southwest Airlines, LUV, another reopening play. They are calling back 209 pilots that were on voluntary temporary leave where they were getting benefits, saying, we need you to come back to work starting in June. We're planning on flying more planes. LUV has been a top performer in this space in the reopening theme. It's been a juggernaut there on the up run. I know we've had it on the option report several times in the last couple of months. Matt, this is one of those stocks that within airlines, you're probably going to have an overweight rating on. Is there anything in the chart that grabs your attention on LUV?
No, I mean, in the short term, yeah, you're looking at a potential breakout yesterday out of a consolidation. You got to keep your eyes on that. Anytime you have a continuation type breakout, a lot of times you do see another trend develop. As you can see, you get neutrality, you break out, a trend develops, you get neutrality, breakout, trend develops. And so you have neutrality, you do have a breakout, trend is developing, you do have earnings coming up fairly tight to be concerned about on the 22nd for any active trader, but that does give you enough time to get price appreciation on this breakout. So I do think there's activity on Southwest before earnings, yes, but long term, no, I think you're waiting for earnings if you're long term at this point.
Yeah, I think so as well. Short term, there's different analysis from the long term. A couple of upgrades grabbed my attention out of the 20 or so. I looked through three that really stood out. I want to go through them real quick. The Chevron upgrade grabbed my attention for two different reasons. CVX, if we can. Goldman Sachs downgraded Chevron, but and simultaneously said Exxon is a conviction buy at the same time, which confused me a little bit. Obviously, those two companies are very similarly rated. In my personal opinion, it's like a take your pick type of situation. And even though I do personally pick Exxon just for my own portfolio, I wouldn't fault anyone for picking Chevron. Matt, why would Exxon say positive things about Exxon on the day they downgrade Chevron? It didn't quite register for me there. What are your thoughts?
This is the repeat of last week with Costco and Walmart. He's not going to say anything. This is it. That's his analysis.
They're the same. Yes. It's I feel like I'm going to get into a
my eyes are hurting. Stop it.
Yes, please. Oh goodness.
We get your point. We get your point.
Are we done?
Yes.
Yeah. Somebody got paid.
Somebody got paid. I agree. I agree with that all the way. Oh, do it one more time.
So, somebody got that Exxon dividend. Somebody got a Buffett Exxon dividend. Who got it?
They're the same situation.
Same chart. What are we doing?
Fundamental,
guys?
by the way, too.
Fundamentally,
as well.
yeah. Do you want me to do? I could do.
Nope.
No.
Two other quick ones. Wynn Casinos. Mark, I know you've been tracking casinos, quite a bit for quite a long time, actually. Wynn has been one of the top casinos for a while. Argus upgraded Wynn to a buy from a hold, and I want to get you guys' take on that, starting with Mark. Mark, do you agree that Wynn Casinos should be a buy rating based on the current situation it's in? And Matt, give me a Wynn if you can.
I'm still stuck on energy. Sorry, it took me a second. I mean, yeah, it's a tough one because Wynn's ran a good chunk. Like on reopening plays, the metric I've used the entire time is basically, percentage run versus, available liquidity and blah, blah, blah. And so whenever something's ran a lot, I get less excited about a reopening play because for me, there's less capture. But I still like the casinos a lot. I really like the casinos a lot. I think you're going to have a lot of positive headlines this year. So I will begrudgingly buy. Yes.
I know it's run a lot in the last 6 months or so, but really, I mean, we're back up into the price ranges it was in during 19 and 20 here, Matt. I mean, do you see Wynn as a buy?
Oh, the economy reopening. This is Wynn's economy recovered. It doesn't have reopening yet. Mm-hmm. So if you do see this as economically reopening and yeah, you definitely can see this at the 200-day moving average making a good run into this breakout at 150, 152. And then if it ever breaks out of 150, 152, there's nothing but clear air until 200. So Yeah, I don't disagree with it. There might be better plays from a economy reopen, but I don't disagree with it.
That's kind of where it was. It sounds like both you guys on the same spot. Kind of hold your breath, and yeah, okay, fine. Hard to fight it here. I see the analysis, and it's in a longer term uptrend from the weekly chart. So yeah, gotcha. Snapchat.
The weekly chart looks a heck of a lot better than the
Than the
daily
daily.
does. The daily's kind of grotesque. There's no swing trade here, and I guess as a swing trader, like you don't get excited.
It's too
from this
messy.
type. Yeah, it's choppy.
messy.
Reopening play charts, they're not pretty. There's been, because it's so much
Some
news,
are.
right? There's so much news.
There's some good looking charts out there. Don't have to trade the nasty ones.
No, you don't. In fact, you can trade the easy ones. That's kind of the big part of the analysis.
like Chevron and Exxon Mobil.
Yeah. You gotta trade the hard ones.
Oh, Queen, with your laugh, I can't delay it anymore. Snapchat got an upgrade, but I don't care right now. We're playing.
Wait a second. Snapchat got an upgrade?
It did. It got upgraded to overweight. I disagreed with it overweight, by the way, the sector. I think there are better social media plays, and I don't like that
I
short-term
disagree
trend.
with that. Technically, too, you got some challenging analysis technically.
Yeah, I agree. Queen's Court, Emily, we've been doing this every Tuesday, on a weekly basis for the better part of a month, maybe even longer than a month. I'd have to go back and check the tape here. But this is where we, as the coaches on Tuesday, bring a pick or a stock or a bit of analysis to submit to you, the queen of tackle trading, the women in trading leader here, Emily Mururi. Queen, you let us all leave with our heads last week. Hopefully we can have the same kind of success this week. Who wants to go first?
I will go first.
Oh.
So Matt and Mark, I will let the queen pick. They both came in same time, Emily.
Well, Mark went first last week and he survived. So I think he's kind of figured out that if he goes first, he has a better chance of surviving.
Yes,
why do you think I wanted to go first? That was my logic too.
So, Mark, you are not going to trick me again. So I am going to go with Matt because Matt went last.
Thank you.
Let's wait, why is mine filled with vile, manipulation, but Matt's is honest and genuine, huh?
Because you have trash that makes cash.
Maybe she knows us. That maybe.
Okay.
Fair point there. All right. Okay.
I've known you guys about the same time. Well, no, actually, I've known you longer than I've known Mark. Mark's just a year behind, but I love him just the same.
It starts with me.
Oh, good Lord. We're not having this discussion right now.
Then Tim. Okay, we're not doing it. All right. Okay, so I'm bringing you a nice little blue chip play because we had blue chip Monday, right? Blue chip Monday. Blue chips came back strong. We started seeing blue chips start to wake up a little bit last week. That's why I brought you Facebook, even though we all know how much I despise this company. But you got to like that Facebook. We love that technically, that snapback retracement coming into that run at the 300 breakout. Really like that, right? Like that breakout. Well, let's talk about a company that I do like. And let's talk about Activision. ATVI. Activision has been a little bit out of favor with the market in recent history. It is our favorite gaming company at Tackle Trading. It's been a Tackle 25 component for how many years now, Tim? 5?
I would say 5, but I'd have to check the tape.
I think
it's been
5.
on there a long time. Yeah.
I think it's 5 years now. Activision has been one of our darlings at Tackle Trading, and it's a company that, because of the liquidity, you can do really whatever you want. But that's not what I'm looking at today. I'm looking at a stock that is performing better than its counterparts. We're looking at a stock that I just talked about this a little bit with energy earlier today, talking about how one of the things I've been seeing in this marketplace is traditional head and shoulders formation when they actually break out has been really good trading environments, and that's what we're seeing on Activision here. And so Activision, I'm looking at a scenario where you have a really good, fundamentally driven company that got caught up in the whole, if you guys remember, the whole growth argument that was happening due to the bond market, whereas comms didn't get caught up in general. gaming companies in comms did. When you're looking at EA, for example, another component in the S&P 500 for gaming. You're talking about a company that just got smacked in this environment, just blew up its chart to a just gobbled mess. When you're looking at, say, Take-Two Entertainment, TTWO, another stock within the S&P 500, blue chip type stock, got caught up in that, just blew that chart up, just got absolutely hammered all the way down to the 200. And now it's fighting up against a recovery, against a ton of moving averages, a ton of overhead resistance levels. When you're looking at some of the gaming companies outside of the S&P 500, and you look at some of those international gaming companies that gets everybody so excited about in short-term analysis, like Billy. Billy had a wonderful trend, momentum trend. But what do we know about momentum trends? Momentum comes, momentum fades, momentum falls. And so when you're looking at this trend is completely over. Now it's just a complete and utter mess of any analysis. We all know how much people love ENGA. Nice little, dirty, sexy money type candidate. But again, you're fighting through so much nonsense here on Zigna. And when you're looking at Roblox, we all know how much we're anticipating Roblox from a game perspective, but we haven't even seen, we have a 9 EMA. That's what we have. We have a 9 EMA to analyze. That's it. We don't have all the cluster moving averages. We don't have historical trends. We don't even have an earnings report yet to analyze. We're in no man's land here. And that leaves me coming back to Activision. Activision, unlike its counterparts in the S&P, which both came down to the 200-day moving average, stuck the landing, stuck support, stuck horizontal resistance. And then as you saw the market wake back up, unlike the other gaming companies who are now fighting up against resistance, you have the blue chip, you have the big dog, you have the A+, you have the triple star, you have the diamond company, otherwise known as the blue chip Activision here, breaking out, nothing above it other than the all-time high. You got a trend developing here, and you got a consistent price action on the breakout, unlike you have in the rest of the gaming area of the market, given the fact that Activision held up in the face of that volatility, whereas the other counterparts did not. My pick for you, Queen, is Activision.
Let me get a weekly on that, please.
You're going to like it.
You always get me on the weeklies. You sell me on the daily, then you put on the weekly, and it's like, oh, that's so
That's
beautiful.
because that's how you sell somebody.
I have no argument there. We can see that it really did hold support there, and that whole significant number at 90. I love it. I love it. And I do not have any exposure in the gaming sector right now. So, and it's a tackle 25. So how can I go against that? How can I go about against this trend?
The gesture has already started dancing, by the way. My head's fine.
Yeah, you're dancing, I see.
My head's fine.
And your mic survived. So I cannot chop your head off today. So
listen,
you survived,
and since
my
the
friend.
mic survived in Queen's Court, let's take a look at Logitech here. And Logitech, oh man, Logitech gets me excited too.
At earnings. What is earnings?
Well, it's going to help because I have to buy a new Logitech mic after the one I broke
Oh,
last week.
you will help them in that.
Yeah.
All right, so Matt survives from the from the sword to the neck here today. Mark, you want to go next, or do you want to save your best for last?
No, I'll go next. Listen. All right, listen, we played a little Monopoly game on the podcast yesterday where, Emily, do you like Monopoly?
Not so much, but go ahead. Let's see what you
got.
got.
I definitely think you should ask a lot of Monopoly questions right now.
Yeah, ask her about the railroads.
Yeah, ask her
let's talk about railroads.
Ask her how many community cards there are.
Let's talk about railroads because my pick is a railroad. Give me UNP. Now, one of the things in analyzing UNP, and there's a lot of things I like. Now, from a technical standpoint, we got a nice little clear air situation to the upside where we have zero resistance to the upside. From a thematic standpoint, I like the railroads a lot. We're heading into a very, very hot economy. When you look at any of the recent economic data, the economic data has been robust. The projections for the economy itself have been robust. There's going to be a lot of activity this year. Now, whenever you have a coming out of recession, whenever you have a hot economy, there are certain sectors, certain areas of the markets that do well. Railroads is one of them. Now, even when the economy wasn't hot, when you zero in on the earnings, so in the midst of the global pandemic meltdown where so many companies were losing money, UNP wasn't. UNP came in with robust earnings given the conditions, robust earnings given the conditions, robust earnings given the conditions. They were making money along the way. A lot of their contracts, a lot of the way they have set up their business, long-term deals, and boy, those railroads, as they've been modernized them to reduce the global carbon footprint, there is a lot to like about railroads in general right now. Industrials are hot. They are going to continue to benefit. Railroads, right there in the midst of it all, there's going to be a lot of goods shipped the rest of the year. There is going to be a very hot economy. Industrials, I think everyone at Tackle Trading loves industrials. And I love the setup. You had a run up let me also say there's a lot of merger and acquisition rumors and activities that can help heat up an area of the market. That's happening with railroads with the recent Kansas City Southern and the what was it, Canadian? Oh, what was the merger?
Yeah, Canadian National
Canadian
Rail.
Pacific.
Yeah.
That merged together. So so whenever you get also that like merger thing, it's an added bonus. Like you never do anything just because of that, but throw that little added bonus on the fire that can help propel. I love the run up a couple weeks ago. I love the pause because that's what happens, right? You pause. You're not going to run up big, huge, massive green candle week after week. Love this for a position trade for the coming months. I think it plays into all of the themes. It's a company that is going to have robust earnings, and I think you could have just a really, really nice position trade with UNP.
Hey,
and
Chucky,
pretty clear. Yes.
Very quickly, I know it's your head and your pick, so I don't want to add something that might get your head chopped off. If you don't mind, I do have something to add here, though.
Mm-hmm.
It's up to you. It's your head.
No, we want the best analysis.
We'll see. Oh, we'll see how much you trust me then. Okay. I just want to make one quick point on this to add to a little bit of the fuel you're adding to this. Okay. We're going to be needing to ship a hell of a lot of that government money around this U.S. as we do a $2 trillion infrastructure plan as well. And trains are going to be the primary method of shipping all of those goods from the government to the corporations who build infrastructure. Mm-hmm. I think that's an added bonus on top of the analysis for, I did like railroads coming in. They're an infrastructure play, no doubt. The infrastructure is the cherry on top for the railroads, in my opinion.
Yeah, there's a lot of cherry on tops on the railroads. And then if you go to a daily chart.
Plus, it's railroads. Who doesn't want to own a railroad?
Like, all right. Enough of this. First of all, let me give you a little bit of history about the Queen, okay? So Queen Elizabeth and her first prime minister, who was Winston Churchill, when he first came to her as her prime minister, he actually, when he came into her chambers, he never sat down and talked to her. He actually stood up because he wanted to give her all the updates quickly and efficiently so she can make a decision and move on about her day, right? So give me a chart on XLI, give me the industrials. So Mark, for future reference, I love, you're not gonna die, you're gonna survive.
Oh. That's all I care about.
Give me your daily.
I thought I was going to die in I thought my head was getting re-chopped off just to go along with Mark there.
Give me a daily chart on that. So Mark, next time start with XLI and then say position trade and then show me the chart of UNP. And you don't have to
Simple.
go around and give me all the other analysis. I have other decisions to make for the rest of the day. So next time you
Yes,
come
my-
into my
my queen.
chambers.
So, anyways, I like it a lot. I like
and
it
do
a
not
lot.
sit down on my seat. Just stand up and give me the details so that I can make a decision.
At least
but I
you
love
got
it. I
compared to
absolutely
Winston
love it.
Churchill in your dress down.
Hold on, I need to stand up now. I'm going next.
I like it.
But I absolutely
Tim better bring
love it.
Tim better bring something good here. I'm just saying.
I'm just saying. No, I'm very nervous, and
I was going to chop your head off for talking too much, but you actually had a great pick. This is beautiful. I love it.
Well, I will run a risk here and give you a little historical tidbit about railroads if you'd like it, my queen.
Oh yeah, that's exactly what the queen signified.
This is how Tim dies.
Just
He just
kill
does
him
not
right now.
listen.
Just kill
Did you-
him right now.
Well, Matt mentioned infrastructure. Did you know that the width of the railroad tires goes all the way back to ancient Rome when they would make it so that as you
How do you not cut his head off?
Just
right
kill
now?
him now.
Just
She
kill
does not
him.
care. The queen does not care.
I find it really interesting.
The
but
queen's
I-
like, Mark, don't waste my time. Tim's like, hold
And what
my
does
beer.
Tim do? He breaks out the encyclopedia.
Hey, Emily, did you know back in ancient Rome, the width of a
Uh,
railroad cut was like, what do we do?
I don't even
original.
care what pick he has. He's dying.
You're
Just
All right,
so
so
bad.
listen, I was going to go off book. If I'm going to die anyway, I'm going to go off book. We're going to go Best Buy. I was debating coming back with one of the
Oh,
best picks in the market, but I'm going to go with an alternative pick here. Couple things, my queen. Number one, part of this whole everybody's going to get back to business and life. And I got one of my first vaccine shots last week. Increased foot traffic in stores. There's no question it's going to happen through the summer as people want to get out there and do stuff. The video game movement, the technology movement, it's never going away. Best Buy they have transformed their company in recent years to where they do a lot of their sales online, not just in person. So they got a double whammy to benefit from that. The long-term weekly chart is really where the technical analysis needs to start because we've been consolidating since last August. We've taken 8 months off after a tremendous run to the upside. It now actually is hesitating and stalling here near resistance. I would put the ultimate clear at 125, by the way. If you want to get ultimate technical clarity, you could get more aggressive with a trigger if you want to. This company sports a 17 PE ratio. Okay. It also has increasing sales numbers year over year, including in 2020 during a pandemic. They did not lose their winning streak of increasing sales year over year, increasing EPS year over year. And yes, they have been in a share buyback program for the better part of half of a decade. I like the setup technically. I like the company fundamentally. I think it fits within the theme of what we're moving towards. Yeah, retail company here. Emily, my queen, that's my analysis.
I have a cherry if you want it.
A chair?
Cherry. I have a cherry.
A cherry. I'll take a cherry. A chair is
I
like I'm
got
going
a
to go
cherry.
hang in the gallows. I don't
I got
want
a
to do
cherry.
that.
I got a cherry.
If
you
Give me a
want
cherry.
it.
Give me a
I got a
cherry.
cherry,
I'll take a
okay.
cherry. I'll take a cherry.
All right, here's a cherry. We all know that consumers are we know the Fed's the backbone of this stock market, but we know consumers are the backbone of the economy. We now are starting to see how much money they spent online in the pandemic. And part of the pandemic and post-pandemic analysis is going to be the percentage of the 900 billion extra dollars consumers spent online last year. What percentage of that is going to maintain with online spending versus going back to the traditional brick and mortar? With what Best Buy did, not only during the pandemic, but before the pandemic, to focus on online, they're in a really good position to capture that revenue, both the maintenance of the increase of online spend last year, but also while consumers back to the brick and mortar, they are in a
My queen.
well.
I apologize. I do apologize sincerely.
Let's just end this right
because
now.
because you promised if his mic started going out,
Oh,
he would
no.
get his
No,
head chopped
You
off.
know where I'm going, but because he's already survived, you have to take the fall for your
There you
brother.
go.
No!
It's so beautiful.
This is garbage.
It's so beautiful.
That's just how it goes.
That's what you get, buddy.
I actually think he sabotaged that. He said, "Can I add a cherry?" But he really wanted you to die.
I think, no, hold on, my queen. I think his mic works now. Can we
Wait
still
a
get the
second.
cherry?
Wait a second. My mic cut out.
Just
Yeah,
for
it did.
like
I'm
1 second.
I'm not saying that was on purpose. I'm not saying.
It was a great analysis until your brother came to give you the cherry on top, and then his mic went off. So
Sorry, bro.
I just have to.
Enjoy the
I
death.
have to. Yeah, I have to stick with what I said. And his mic did cut off, and because he's already survived, he's out of my chambers.
Oh,
You, my friend,
you should have listened to the cherry. The
get
cherry
your-
was all about percentage income of what Best Buy is going to maintain post-pandemic online spend. It was all numbers that would help you. I'm sorry, bro.
And Tim, when he asked you for the cherry, you should have said no, because like I told Mark, just give me the basics. You already had me sold, and then you went on and on and on and brought your brother in. So you just have to. I'm
Whatever.
sorry,
He
I can't.
started by talking about ancient Rome. Like, come on.
I got more tidbits about ancient Rome. Did
It's
you know the water?
It's a great pick, but I just have to kill you. What about the water?
The water duct systems were the origins of the
God.
modern,
Yes, I thought we cut his head off.
He's done.
I've got
He's done.
more historical tidbits. By the way, go ahead, Mark.
No, you just don't know when to stop.
Off
He
with my
doesn't.
head. Off with my head. Fine, my queen.
Honestly, though, how much of the 900 billion analysis did you get?
A little bit.
Very little.
Very
But
little.
yeah,
The only
but
thing I'm going to
we
say,
had
and it's not just pertaining to Best Buy, we are starting to see the numbers based on how much consumer spend went online last year.
Mhm.
Report out today that $900 billion additional dollars were spent online total. So a lot of this brick and mortar versus online spend moving into the future, we're really kind of analyzing how much of that online spend is going to maintain moving into the future as we move into post-pandemic. Best Buy is in a wonderful position to maintain online spend while also capture the brick and mortar, the additional brick and mortar spend that's going to happen as consumers get back out there. I think Best Buy's in a wonderful position.
Yeah, I like it too. I'm glad you do. I think it's got a good setup here, and you can be patient with it. You know, this is a weekly chart, right? You can be patient
Well,
for
it is.
for the breakout.
Well, it's, and you can be very patient with this chart. You got a little bit of the same run up here that you have here. You can be patient as this kind of cooks a little bit and threatens that 125 breakout. So absolutely, you can be patient.
Yep. And for the record, Tim did not get his head chopped off because of bringing Best Buy. It's just his.
For the
it's
record,
him
his
being
head's
extra.
chopped off.
It's just being extra.
Ain't no record.
Best Buy was
very-
perfectly
Listen,
fine.
I'm a very simple man. Head's chopped off. He's dead. Like,
Yeah.
it doesn't matter what the rationality that
Where's
caused
he's
him.
gone.
But,
Learn from my mistakes.
yeah, 20 years from now, I'm gonna be
Uh,
like, yeah, the time my mic cut out and got Tim killed, but that's 20 years from now.
That's right. My queen, it's too bad I couldn't bring the analysis for you today. Maybe I just talked too much right there, and I got my head lopped off. Mark and Matt survive another week. Thank you as always. That's a fun segment. I do enjoy it quite a bit. Guys, that's our show here today. Let's start moving into final thoughts and wrapping up. Queen, you're the guest here on Tuesday. I'll let you have the final word.
Oh, final thoughts is, I'm getting back in the grind, so I gotta go and catch up on all the weekend scouting reports and just bring myself up to date and get my weekly routine going, even though I'm a couple of days behind. But that's part of what we do. Even when you kind of get off track, you still gotta just jump back in at it again and just keep grinding. So I am looking forward to spending some time on my computer this evening and kind of going through and finding some picks for me to trade this week.
Fantastic. Marky, what about you? Final thoughts and any programming notes you want to update people on?
I mean, just generally in the market. I mean, I'm expecting a decent April. I'm not going to go crazy. I'm not going to, I was looking at margin statistics, and we are still at these insane numbers of margin abuse, record highs. Hey, margin never matters till it does. I mean, Archegos, it matters when it does. Just don't be so greedy that it impacts your decisions. That's a message I probably said 100 times, but it is one that keeps is worthy. Tonight on the Coacher Show, we got Gino Poor and Greg Holmes. So for pro members, check out Greg and Gino have something nice prepared for you. 8:30 Eastern on tackletrading.com.
Fantastic. Maddie, any final thoughts?
No, I'm good.
Yeah,
Look forward to the Coach Show today.
Little doji in the markets today. Had a lot of fun on the show here today. By the way, if you're out there watching and you've not done it yet, we like those thumbs up. They help us get the word out for our programming here on our YouTube channel. And if you're new to the channel, subscribe, click the bell, come back and join us on a daily basis. And if you are a new pro member, Coach Emily did the onboarding last night. You can catch that video here on our channel. It's the last video just before the halftime report. Go through and watch that, learn how to use the site, use the resources that the pro membership offers and brings to you. And if you're not yet a pro member, 15-day trial in the comments of every one of our YouTube videos. Have a wonderful day, everybody. We'll see you guys tomorrow, same time, same station.
Later, Tackle.